Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to this Thursday, March 20th edition of the AICPA Town Hall. My name is Michael Cerami and I will be one of your hosts for today. As you can see, we've got a great agenda for you this afternoon. We're going to do a DC update. We have Rachel Dressen in from our governmental affairs team. We're going to do an economic outlook with Marcy Rosell. Marcy's a frequent contributor to the town hall, and she's going to be here with us to give us some of her perspective on what's going on with the broader economy. We're going to talk a little bit about simplification, which we probably could all use a little bit of, with Lisa Bodell. Lisa is someone who we've worked with on and off in the past, and she's going to have some great insights to share with all of you. And then we have Lisa Simpson here to provide some of our highly anticipated technical updates, and then we'll close with open forum and closing remarks. So I would love to go ahead and invite in Lisa Simpson to join me. Lisa, how are you?
I'm good. I like that you think those technical updates are always highly anticipated. So thanks for that ringing endorsement.
I absolutely do, Lisa, and you know, folks pay very close attention when you speak about your technical updates. So it's great to see you, Lisa. It was actually great having you here in New York last week. We were both able to participate. We co-hosted our cohort from the 2025 AICPA, CPA.com Startup Accelerator, and just for folks out there who may not be familiar, each year we sponsor about 6 to 8 early stage companies who are doing some pretty neat and innovative things to help drive efficiency and enhance value across the accounting and finance landscape. And this was this year's cohort. You can see our big team picture there after we met for a couple of days, and just some great companies, some great energy. And this is the categories that each of them are practicing in. But Lisa, you know, you were there. It was a pretty good couple of days, wouldn't you say?
It was fascinating, and it's just so exciting to see the impact that technology is having on the profession and that it's going to continue to have. I love seeing how all of these startups are focused on eliminating a lot of the manual, repetitive tasks that maybe have given accounting and finance a bad name. This technology developments that we're seeing are really eliminating so much of that, and it's so exciting. One of these startups is all about automating through Gen AI revenue recognition, which may not sound super exciting, but when they talk through what their program is capable of, it's just mind-blowing. And then looking at some of the tax software that's either going to get the tax return prepared almost to the finish line, and then bring the human in for the reviews and the quality controls. It's just incredible, and I think it's really going to help the profession tell a different story as we go forward about what accounting and finance really is. It's a lot of technology.
I completely agree, Lisa. Great points. I mean, you definitely leave those couple of days feeling energized, and that in some ways help is on the way. I think there's so much innovation and ways to kind of augment what professionals are doing. Clearly not replacing what they are doing, and I think it's just gonna, we talk about capacity all the time, and I think there's a lot of tools and resources that are gonna just continue to help practitioners build capacity within their firms. Just kind of tethered to that, next week we'll be hosting here in our New York offices a AI Accounting and Finance Symposium. So we bring together the entire ecosystem around AI. That's practitioners, that's technology companies, it's regulators, it's academia, it's everybody that's kind of impacted and a stakeholder in AI, and the impact that AI can have throughout accounting and finance. So we're really excited about that. And as we do with all of our symposiums, we'll be creating some summary documents and papers that we can distribute to the town hall audience that just kind of speaks to the trends that are taking place. So lots of fun stuff, and Lisa and I just wanted to share that with you. So let's go ahead and bring in Rachel Dressen from our DC office. Hey, Rachel.
Hi, good to see you.
Good to see you. Thanks for being with us here today. there's not a ton going on right now in DC, but there are some things happening, and I know you're going to go ahead and maybe share a little bit of that perspective with us.
Yeah, well, right now, Congress is in recess, both the House and the Senate, but it is still very active, as all of our leaders are aware of. There's a lot of information coming out right now. And there's just a flood of information, and some of it is just creating some confusion. Some of it is a little bit misleading. Some of the reporting and some of the information is accurate. Some is a little bit exaggerated. So what we're doing here is we're just trying to sift through all of that noise and make sure that we are getting everyone the most accurate information possible. We're also having conversations with the IRS, given the fact that there are a lot of reports out there about, how the taxpayer service is going. And from what we have heard thus far is that there don't appear to be any disruptions in the filing season compared to last year. So that is good news. We know that there is still, a few weeks left until April 15th, but we are continuing to have a dialogue with the IRS, sifting through some of the noise. And we've always been advocating for an effective and efficient tax administration service, and we continue to do so.
Well, Rachel, we're gonna, I know Lisa, myself, we're always talking to firms and asking that same question, but we thought it'd be great here on the town hall to kind of test that with a little poll, just asking attendees, how do you feel IRS tax season service levels are this year compared to last year? And so kind of about the same, trending a little bit better, trending a little bit worse, or this is not applicable to you. So I'm going to go ahead and activate the poll. Lisa Simpson, I don't know if there was anything.
Yeah, I was just going to say, we're getting a lot of those into the Q&A. So hopefully the pop-up window will work as well. But we'll share the results after in the town hall newsletter next week. I'm hearing basically that it's about the same. We've heard frustrations over the last couple of years about you might be able to get someone on the phone, but they may not be able to resolve your issue. I'm not hearing about any significant delays in filings getting accepted or refunds getting processed. But again, would love to hear, from you guys what you're really seeing.
We have lots of answers coming in. We're going to tally these, Lisa, and we're actually going to share them out in the town hall newsletter, which will go out after today's broadcast, so everybody can kind of take a peek at how things are shaping up.
And thank you all for your feedback. It's really helpful.
So I think we're about full with the poll. So thank you all for participating, and look forward to sharing those results. So Rachel, maybe let's pivot and just talk about the government funding situation.
Yes, so we wanted to update everyone on government funding because it is something that we've talked about for many months now on the town hall. And the last CR, or continuing resolution, expired last Friday. And there were some questions whether or not Congress would be able to fund the government. And as what typically happens with these things, it comes right down to the last minute. And there's always some, questions on whether or not they're going to get it done. And that happened last week. And it came down to the actual final vote where people didn't know whether or not they would have enough votes to fund the government, and they did. So it looks like the government will be funded through the rest of the fiscal year, which ends on September 30th. And just one thing I'll highlight, so it was a CR, so it continues the funding at the previous levels with just very few changes to it. One of the changes that was included was a $20 billion cut to the IRS. If you recall, the Inflation Reduction Act included $80 billion to the IRS. $20 billion of that has previously been clawed back. And last December, they froze $20 billion when they did a CR then, and they then cut that $20 billion this time around. So that's something we thought the town hall community might be interested in knowing. But other than that, the CR was pretty clean in Congress's terms.
And so now all focus kind of shifts to the budget reconciliation process, Rachel.
Yes, so this is the big one right now in DC, and it probably will be until it happens or doesn't happen. But for the next few months, this is everything that everyone has been looking at doing for the beginning of this year. So what the budget reconciliation is, just for a reminder for anyone who might not be as familiar with it, is it's a process in which Congress can pass legislation without the filibuster-proof 60 votes in the Senate. They would only need a majority vote. And to kickstart this, they have to pass a budget resolution. And the budget resolution has to be the same in both the House and the Senate. The House and the Senate have both passed budget resolutions, but the only issue is that they are vastly different. And so they are working together right now in trying to come up with a resolution that they can both pass. And so the House, their resolution is comprehensive. The Senate, they took a different approach where the resolution that they passed is focused on defense, energy, and the border right now, with the idea of passing a second budget resolution and reconciliation bill later this year. So what could happen now is the Senate could take up the House bill, but the Senate wants to make some changes to it. So it's likely that they will try to make some changes and then try to have the House pass whatever they pass as far as just one comprehensive bill. And one of the big questions right now is the baseline. Do they use a current policy baseline or a current law baseline? And the difference is if they use a current policy baseline, they don't have to find $4.5 trillion to extend the TCJA tax cuts. So that's a big difference. But it is all up to the Senate parliamentarian to determine whether or not they can use current policy versus current law. In DC right now, everyone is saying that the most powerful person in DC is the parliamentarian, because that individual has the power to determine what makes it or does not make it in the budget reconciliation bill. So right now they're having ongoing discussions on the resolution to then move forward to the reconciliation process.
Rachel, I'm sure we're going to get some questions about some of our favorite tax provisions and whether they're going to be included in the budget reconciliation. So let's just go ahead and level set. Should I be asking you questions about things like Section 174, or should we just have to wait and hold off for a while?
So right now, nobody knows what's going to happen in this bill, what will make it in and what won't make it in. And a lot of it has to do whether or not they're able to use current policy versus current law baseline. So if anyone tells you they know what's going to be in the bill, don't trust them.
Rachel, that was a great update, and you're right. This is something we'll be all over, and it's a perfect forum, the town hall, to keep everybody kind of updated as we get smarter about where things are headed. And Lisa, I know we did want to talk a little bit about the expansion of Section 529.
Yeah, and Rachel, I know this is one the advocacy team has been working on for quite some time, and so it's my understanding that legislation was introduced into the House, and is it only in the House so far? And then we'll talk a little bit about what's included and why it's important.
It's now been introduced in the Senate also.
Okay, great. And so this provision that we've been advocating for as a profession would allow Section 529 education funds to be expanded and be able to use for post-secondary education or post-secondary training and certification programs. So why is that important to us? Because it could help offset some of the costs of the CPA exam. So that's why we're interested in this. That's why we're advocating for it, so that professionals looking for that CPA certification could use these 529 funds to take the exam and study for the exam. There's a letter that the advocacy team introduced to House Ways and Means and Senate Finance that listed out several other key tax priorities for the AICPA, and they include things like the section or the 1099K reporting threshold. If you guys remember all the drama of the last few years, it's now at $600. We've gotten some relief from the IRS through administrative procedures the last couple of years, and we're advocating that that be raised to $10,000 for transaction reporting through online vendor payments like Venmo and then PayPal. So I've given you a link to a Journal of Accountancy article that will tell you some of the other priorities that we're looking for. Rachel, one of them is around disaster relief. I know that's been a key topic that we've been advocating for quite some time as well. So hopefully we'll find a legislative vehicle and get some of these through.
Yes, hopefully. And I will just add that on this 529 bill, this is something that we could see in budget reconciliation. Like we mentioned earlier, we don't know, but we're hopeful that this would be included.
Great.
Well, Rachel, thank you. It was a great update. We're going to have you back in open forum. Lots of questions coming in, so we'll see you shortly. And Lisa, thank you. And I know you're going to be back with me momentarily, so thank you for those insights. And let's go ahead and pivot and invite in Marcy Rosell. Welcome back, Marcy.
Hey there, Michael. It's great to be here.
It's good to have you, and thank you. You again are a valued and frequent contributor to these town hall discussions, so it's great to have you here with us today. I guess we'll just jump right in. We're almost 90 days into the new year, and we thought maybe we could talk a little bit about just kind of your general outlook, or just kind of your general thoughts on those first 90 days, and then the outlook maybe in going into Q2.
Sure. That sounds great. Well, the first thing that I've brought with me is just a quick chart to show you just how uncertain the world is right now. So one of the things that economists always look at is policy uncertainty. And this is something that, after the financial crisis of 2008, 2009, really kind of a lot of people started chattering about how uncertainty around economic policy can actually have real economic consequences. And so we have a new administration in Washington, right? And you just now were talking about a lot of the uncertainty right now around what the fiscal outlook is going to look like for the U.S., a lot of tax cuts that are expiring. And so we are seeing now that the global economic policy uncertainty index is above where it was during COVID-19. So just to give you a little history on that, globally, the world had pretty steady policy up until the financial crisis of 2008, 2009. And then suddenly, uncertainty around policies really exploded. And it feels like we just moved from crisis environment to crisis environment to crisis environment. And so now the world is kind of back in one of those spaces where the uncertainty around particularly not only fiscal policy in the US, but also tariff policy in the US has heightened the level of uncertainty. Now, the researchers who put together this index basically also have looked at the results of uncertainty, and they can have real economic consequences. They can cause businesses to postpone investment or change their investment plans in an effort to sort of deal with this policy uncertainty. And it's something that is beginning to play out in the economic numbers that we are seeing come out quite recently. So we moved into this first quarter of the year with the U.S. economy in particular on really firm footing. GDP was running about 2.5%. The unemployment rate had come to about 4%. And most importantly, inflation numbers were approaching the Fed's magic number of 2%. So everything was looking really rosy in December and January. And nothing real about the underlying economy has changed other than this uncertainty, this stop and go around tariff policy, which is having some real economic consequences. In particular, two things appear to be happening. Businesses are postponing expansion as a result. And more importantly, they're stockpiling inventories in an attempt to get ahead of this kind of April tariff deadline. So we're seeing a rush of imports into the US, and that is lowering the projection for GDP this quarter and the next quarter. So everybody needs to remember that gross domestic product, GDP, the main economic indicator, it just measures production in the US, but it also is negatively impacted by imports. So imports subtract away from GDP. And that's one of the things that's starting to sort of make people concerned about growth numbers, because this surge in imports in an effort to get in front of the tariffs that may be changing, or may not, who knows, but may be changing in April. So that's kind of where things are standing right now at this moment.
And Marcy, I mean, so right, predictability, markets like predictability, and clearly we're in a period of change. There's also though a lot of talk of, is a recession imminent? I mean, what are your thoughts on that?
Michael, I want to be very, very clear. I am not in the camp that believes a recession is imminent. So I want to be very, very clear. Now, I smell the same smoke that everybody else does. I'm just not ready to pull the fire alarm just yet. So it's true that the S&P 500 is in correction territory, and people look at that and say, oh, there must be a recession around the corner. Or it just could be a revaluation of the most high-flying technology stocks, right? So there are times when the stock market and the economy don't move in the same direction. Right. And so you really do have to look at some forward-looking economic indicators to really get a recession sense. So it is also true that consumer sentiment is really, really low. So the way people feel about the economy has also taken a step down over the last couple of months. But, Michael, I want to point something out a little long term, because we really do focus in at times like these on the headlines that are right in front of us. But you can't use things like consumer sentiment any longer to really get a good read of where the economy is headed. When I look back 25 years ago to the turn of the century, consumer sentiment hit an all-time high in January of 2000. It has never hit that level since then. It's currently gone from that high of 112 to less than 70. So we've seen over the last 25 years a slow, steady decline in the way people feel about the economy. While GDP per person in the US is double what it was 25 years ago. So by any kind of economic measure, the economy, standards of living are better today than they were 25 years ago. Yet the way people feel about the economy is much lower. So it means for people like me that we can't use some of those traditional forward-looking forecasting tools to say a recession is imminent, because it doesn't provide the same signal today that it has in the past.
That's a great point, and it is really interesting to see that, I guess, lack of correlation between sentiment and maybe how things play out. So maybe talk a little bit about what indicators do you pay the most attention to, and maybe what they're suggesting as you look out.
Well, I look very closely at the weekly claims for unemployment benefits. So every single week we get a slightly delayed number, but it's only about 2 weeks old. So it's some of the freshest data we can have on the economy to let us know, are companies firing people? Are people not getting jobs? Because that's really your best indication of how much companies are pulling back in response to the environment that they are seeing. So, for instance, during COVID-19, obviously there were lots of people applying for unemployment benefits, and that number went over 1 million. So there were millions of people applying for unemployment benefits back then. Right now, we're seeing applications for unemployment benefits at a little bit over 200,000 a week, which is where that number has been for years now. So, in the post-COVID environment, totally normal number. It's tracked up a little bit, but not anywhere near the 300,000 that you would look to see as what I would call a legitimate recessionary signal. So we're in this phase where there's a lot of talk, but we haven't seen the real action yet. And in my mind, what people say and what they do are two very different things. So I'm looking not at what people are saying, but what they're actually doing. And we are not seeing the layoffs that are being talked about actually show up in real economic numbers just yet.
Are there others, Marcy, besides unemployment that maybe you're paying particular attention to?
Sure, sure. Well, obviously, I look at the stock market just like everyone else does. But I'm going to look at the stock market really over the next 3 months rather than just 3 weeks. 3 weeks, it's not enough. 3 months, now there's legitimate information there. I'm looking very closely at the price of oil and gas because one of the things people sort of celebrate cheaper oil, cheaper gasoline. But as an economist, I know that when the economy gets in trouble, that's when gas prices decline. So they are a very pro-cyclical indicator. So when gas prices start going down quickly, that might be great for my personal pocketbook, but it's a sign for the economy that overall economic activity is slowing down rapidly. So that's something else that I'm going to be watching very closely right now.
Great insights, Marcy. Maybe one last question. You were really clear about where you fall out on recession. What about the whole concept of stagflation? I mean, is that, where we're kind of living in this, where inflation seems to go, getting higher, and then the economy or growth is cooling, is typically a stagflation phase. But maybe talk a little bit about that.
Well, Michael, you and I really kind of show our age when we start talking about stagflation, because the last time there was real stagflation in America was the late 70s and the early 1980s. And that was a time when unemployment rates were elevated to almost 10%. And the inflation rate was running at almost 10%. So that misery index, when you add the two together, almost hit 20%. The real economic data right now is that the unemployment rate is at 4%. This is a reasonable, relatively nice low level by anyone's standard, right? And inflation, even though the tariffs are definitely concerning in terms of putting upward pressure on inflation, it hadn't really shown up in the data yet. So inflation is running at 3%. 3% inflation, 4% unemployment. That's not stagflation in anyone's universe.
Yeah, that's really great points, Marcy. We're going to bring our final slide up here in just a second, and this is just a poll, a survey that AICPA puts out that just takes kind of the view of kind of optimism of financial professionals and kind of what it was in Q4. We had optimism about a 67% raise, and here in Q1 it's kind of dropped to 47%. But I think if you look at the graph, you still notice while it's declined from the 67, it's still relatively high to the previous quarters. But you also, I think, just kind of gave us a lot of good feedback on connection between outlook or optimism and maybe really how the economy is doing. There's maybe not necessarily that correlation there.
I got to tell you, Michael, again, this is one of those times where it's more important to see what people actually do than what they actually say.
Great feedback. Marcy, I'll give you a final word. Anything else you think you'd want to add as it relates to the economy?
Well, I think that I will leave you with that feeling versus actuality. And know that I get a lot of talk right now around, can you trust government numbers? And I got to tell you, in my entire career, which is, 30 plus years of being a professional economist, I have never had any reason to doubt the numbers that come out of Washington. And I'm going to stay with that until I have some evidence otherwise.
Well, Marcy, great having you here. And I know we're going to have you back soon. So appreciate you sharing your thoughts today on the economy.
Thanks, everybody.
Bye-bye now. All right, so let's bring in Lisa Bodell, Unleash the Power of Simple. I'd like to welcome Lisa. And
hi, Michael, thank you.
Hey, Lisa, great to see you. And I think Lisa Simpson's going to join us too.
Great.
Welcome back, both of you. So, Lisa, you're somebody we've worked with throughout the years. We've had you at our Digital CPA conference. You're going to speak again this year at Digital CPA. We're kind of living through times where everybody is kind of hit over the head with change and transformation. And whether you're in practice, you're in industry, any facet of business or life, you're being told to change is the constant and to keep changing. And we thought it'd be great to have you in here today to just talk a little bit about this concept and of kind of transforming work and ourselves, and maybe calm through the chaos, I think, as you like to put it. So to talk about this concept of simplification, Lisa.
Will do. And Michael, thank you. And thanks to everybody listening. Of course, it's a pleasure to be here. And I'll give you just a quick personal note. My mother was a CPA with her own business for over 40 years. And I do know what a incredibly fun time this is for you all right now. Fun fact, I used to send my mom flowers every tax day from the IRS as a joke, thanking her for her service. So thank you all for your service. And my job today is to talk about simplification, Michael. So we had talked before this that this was a timely topic because, first of all, external factors. I mean, I think as a world right now, just in terms of culture, politically, technology-wise, there's chaos and there's a lot of complexity, and that has been increasing over time. And as a result of that, people are looking for some semblance of calm and some semblance of clarity and some semblance of control. That's really what it comes down to. And I think in an effort to get that control, there's this issue where people think if they were only more organized, things would be better. If they only would be better at time management, things would finally be able to be in control for them. And the reality is, this isn't about just productivity and time management, because the reality now is there isn't enough time. You can't spreadsheet your way out of this. And so what we want to be able to do is stop fixing people to do more work and start fixing work to better leverage our skills. And so that's why I wanted to talk about how simplification really is more than productivity. It unlocks potential. And everybody here is incredibly skilled, or they wouldn't be doing what they're doing. I also bet everybody here is very frustrated because they can't get to what they set out to do every single day. Something gets in the way. And the issue is we've got to start making this more about a strategic advantage for everybody and give them the permission to simplify. So let's go to the next slide, actually. I'd like everybody here just to quickly think about this question. What do you typically spend your day doing? So again, we've got a big group here. If you look at your everyday and think about your typical tasks, what would you say that you, or even your team, if you have people report to you, spend their day doing?
I know Lisa Simpson had a big circle around meetings and emails. I think she...
Meetings and emails. I'm so seen right now.
Well, Michael, how about you? Same?
Yeah, oh yeah.
I laugh because no matter the company I speak to or the country I'm in or the level of person, and I ask this question if I'm giving a talk, the number one and number two things that people say are meetings and emails. And so what you see is that people are drowning in the work of work. And nobody, at least I hope nobody on this webinar, was hired for their amazing meeting skills or their ability to email every day. But that's where we spend our time. In fact, McKinsey research shows that over 85% of our time is spent in meetings, emails, and busy work. And it's about 14% is spent doing meaningful work. That is 5.5 hours a week. Now, I don't know about you, but as somebody who runs a business here in New York City, I can't afford to have a team of people that only work really hard on meaningful things 5.5 hours a week. Right. So what do? We've got to start thinking differently about simplicity. And we've got to look at it as something that's a strategic advantage, because the people listening here, I'll just give you some stats, because I think this is a group of people that likes numbers. If you are operating with complexity, you will lose 10% on average of your profit to waste. You will have an increase of burnout by over 80%. Conversely, if you operate with simplicity, you are more likely to have, if you're a public company, a higher stock price, 70% more likely to have customers that recommend you. you have engagement from your employees by over 50%, and your burnout goes down by 90%. So there's a lot to that.
Sign me up. I'm ready. Tell me how to do that.
Well, here's how. So here's what we need to do. So just for the people here, let's start doing a couple changes to our approach to work. And then I want to give you some tips to do it. Here are the pitfalls that I think most of the people listening fall into. The first thing is that we've got to stop organizing and start simplifying. So I don't know about you, Michael and Lisa, but I am an incredibly organized person. And after a while, I realized as I got older in the workforce that I was taking on more, but I wasn't taking on valuable. And it was because I was spending my time organizing stuff. But it doesn't matter if you're, doing everything right if you're not doing the right things.
Well, I think, I mean, that's a great, you're talking to a group of people, of financial professionals who, I mean, if you gave them a personalysis, you would see, are incredibly well organized and detailed, and probably do think they can organize their way out of most things.
I would agree. And that's why I laugh when I say you can't spreadsheet your way out of this. So, Marie Kondo, the closet organizer, the great thing about her wasn't organizing everything in your closet. It was just organizing the things that brought you joy. And so the idea is, how do we focus on valuable? So that's tip number one in terms of changing your thinking at work. And especially for those of us that are a little bit older, that's not easy. Let's go to the next one if we could. This one is about how do we start valuing subtraction, not just addition. And this is counterintuitive, especially for those here that are individual practitioners or leaders. And the reason for that is because we are continually bonusing people, promoting people, rewarding people for more, not less. And that's starting to change. I actually work with Sanofi, which is a large pharmaceutical company, and they have built in to their strategic planning a process called Stop It. And what that means is when people have to present their strategic plans, they don't just present all the things that they're going to do next year, but they must also, at every team level, present what they will stop doing next year as well. And what's cool about that is most people don't even think that they can stop things, and this forces them to get rid of stuff. So let's act less like architects and more like sculptors.
I love that, Lisa. And if I put myself inside a firm, I think being given permission to simplify, to think about what you're going to stop doing, I think that can really be the key to opening up potential in the workforce. So I love that one.
I agree. And I think, you think about it, Lisa or Michael, I bet a few things come to your mind right away that you could stop doing with your team that would free up time for work. Yeah.
Yep.
Let's go to the next one. The last approach that I'd love people to think differently about is more compass, less clock. And the reason for this is because, if you went home tonight and someone asked you, what did you do today? I will bet you for most people, the first thing that pops into their mind is their Outlook calendar. Because you think about what you did at 9 o'clock, 10 o'clock, you basically are not leading or managing, you are executing your calendar every day. And what this gets to is we have to start thinking about time differently because it's a non-renewable resource. You will never get it back. So are you spending your time or are you investing your time? And that gives you the power to really understand how to spend your time with intention, how to stop doing things out of obligation, how to think about what you'll say yes to and what you'll say no to. So you can be thinking versus just doing. So a couple things for people. Let's just go to the next slide. I'd love everyone here to think about, and Lisa and Michael, you too, what are some of the unnecessary things that you spend time on every day that you could get rid of? There's so many. The thing I'm getting at here is you live in a world that is very regulated, and there is necessary complexity. Let's be clear, right? I want my doctor to go to medical school. I'd like my pilot to have his flight light. You know what I'm saying? But we're talking about unnecessary complexity. It is invisible waste. It is work without the benefits, and that's what you deserve to get rid of. So one trick you can try, if you go to the next slide, is killing stupid rules. And this is one of my favorite ones because we're talking about rules within your sphere of control, right? I'm not trying to go against the IRS. I'm not trying to go against any financial regulations. We'll go to jail if we do that. Let's not. I think what we want to do instead is in our sphere of control, think about the work you do every day. What stupid rules could you get rid of? And I'm just sharing a quick graphic here from my company called FutureThink. This is an exercise I have done with the CEO at Pfizer, at Microsoft, at Google, at Fidelity. And what we do is we ask groups of people, and I asked my team, if you could get rid of any rules that hold you back, what would you get rid of? And this is an example of one of our rule graveyards. We make every rule killed on a little tombstone. And we do this quarterly. And I will tell you, anyone I do this with clients or my team, they come up with dozens of ideas. And fun fact, most of them aren't rules. And other fun fact, most of them are my stupid rules that I have put in place.
I'm thinking about this for my next all-team meeting. I love it. And I really think that possibly most of them are going to be my stupid rules. So this is really eye-opening.
And they're like weeds, they grow back. The last piece here is I just want everybody to know and think about this. There's lots of things you can do. I hope you'll give yourself permission to simplify. And the biggest question isn't what will you get rid of, but frankly, what is stopping you? Because so many of you here are in control of your businesses, but you need to be in control of your time. So I hope you'll really think about what's stopping you from simplifying and give yourself permission to subtract, not just add. Michael and Lisa, thank you for letting me talk.
No, Lisa, thank you. I mean, it's not easy to put these concepts into a 15-minute talk, and you do such a great job of making it digestible, but probably more important to this audience, actionable, and that's what everybody wants to leave with. And that's why we're having you back in December at Digital CPA, where you can give a much more comprehensive talk on strategies for actually applying this in your day-to-day life. And I think Lisa Simpson nailed it when she said it. Permissioning is a big piece of this. Depending where you're at in the organization, feeling like you have the permission, because a lot of times busy work is seen as productivity and it's really not. And so people, may not be working on those things that are most important or strategic. So really great insights. And I think Lisa Simpson, maybe you're going to talk a little bit on how we can apply some of this. But Lisa Bodell, thank you. And we'll have you back for the open forum.
I think I'm going to replay this every Monday morning onto my calendar so that I can keep up with the mantra of simplifying and figuring out what stupid rules I'm imposing on myself or on others. But as I was talking with Lisa early and we were prepping for this, I was immediately brought back to a toolkit that we have that AICPA members can access through PCPS, and it's about right-sizing your client-based toolkit. If you've heard me talk about this before, I get really passionate because I transport back to when we were all in the pandemic, and so many of you were working so hard to help every single person who walked through the door. And what we all came to realize is that we need to be more strategic about what services we're providing and to whom. And what I also learned through so many of you in this community is that that's hard to do. It is hard to let go of clients. It is hard to stop doing things, especially if it's someone that's been a client for so long. But this is the key tenet of this toolkit. It's going to walk you through a process that has been time tested. It's going to provide you checklists so that you can make sure that you're letting go of clients in the right way. I know it's March 20th and that's not going to happen today, but I want this in the forefront of your mind as we come out of busy season. Be thinking about how you can use right sizing and or simplifying to help with your capacity challenges, to improve the people retention. Because if you can even out workflows throughout the year, you're not going to suffer burnout as much. You can improve client loyalty. One of the main reasons people and businesses leave their CPAs is because their CPA was unresponsive or not proactive. By freeing up this time to work with the right clients, you can provide that more advisory service. It's going to improve profitability. Now, you can believe me or you can believe your peers. Two of my favorite podcasts that we've recorded over the past 2 years are on this topic, and I'm going to point them out to you at the bottom of the slide. Business Model Transformation and A Revolution in Right Sizing. Whenever you need motivation to think, can I really do this? Can I really right size? These are the two podcasts I want you to come back and listen to. Tons of resources, tons of articles to support you. but just think about how doing this process can help you simplify and right-size your firm and business. This doesn't only apply to public accounting firms. So that's my soapbox. And now we'll move on into the technical updates. And we've been getting a lot of questions about BOI. Where's the BOI update? Where's the BOI update? So here it is. If you remember, a couple of weeks ago, we let everybody know that FinCEN had said it was going to announce new BOI reporting deadlines no later than March 21. I think it's March 20, but they're going to do this via an interim final rule, which again, from my PPP days, I've learned can take forever to get through the process. So by tomorrow, we might be getting new deadlines. But after FinCEN announced that, Treasury came out and said it will not enforce BOI fines or penalties, important caveat, against U.S. citizens or domestic reporting companies or their beneficial owners. So some of the entities that had previously been required to file will no longer have to file. But we're still waiting on what the next rules are going to look like. The Treasury and FinCEN are hoping to provide more clarity and give us some new guidance that will help with all of this. AICPA is absolutely in support of this because of the confusion that we've seen around BOI and because of so many of the small business burdens that this has required. We're asking for an extension to January 1, 2026 for any new filing deadlines. It doesn't mean that we're not in favor of anti-money laundering regulations. We absolutely understand the global implications of that, but we do want to help simplify the process and make sure that the reporting makes sense. So that's your BOI update. We will keep you posted if we get any more news. Moving on to disaster relief, West Virginia and Kentucky have been given disaster relief for some recent flooding and straight-line winds and a lot of damage that's occurred. So I've given you a link to the particulars for each of those states. I always want to give you a reminder that we have disaster relief resources, including FAQs, and we also have the AICPA Benevolent Fund that's available for AICPA members that can help with a lot of the challenges that that disasters can cause. So you've got that link and a reminder to use the Benevolent Fund. We're getting to the end of individual filing season for the first round. And I know that a lot of you are probably talking to your clients about extensions. Some clients may be hesitant. They may think that it increases their risk for getting audited, or they may not understand that they have to pay on April 15, even if the return isn't due until October 15. So we wanted to make sure that we took this opportunity to remind you about the resources that we have that you can use to communicate with your clients around extensions. Hopefully that can help you get rid of some of the misconceptions and again, even out some of that workflow that I know can pile up right now. A couple more technical updates and then we'll move into open forum. I love this slide because it lets me think about, am I going to retire to the mountains or the beach or somewhere in between? But we'll get to that. This is an important reminder about required minimum distributions. And if you remember a couple of years ago, there was some confusion about when certain age groups had to start taking their RMDs. So as a reminder, for those who reached the age of 73 in 2024, the deadline for them to start taking their RMDs is April 1. So you've got the links there to the details. But again, important date coming up just around the corner for those who reached age 73 in 2024. If you want to drop in where you want to retire into the Q&A, we'll have some fun with that too. Another topic that we've talked about a lot, but haven't really gotten any good updates on lately is employee retention credit. And I know I continue to see questions about what's going on. And a little bit of good news, someone put into the Q&A that after 2 years, their client finally got an $84,000 employee retention credit refund. So that's great news. But there's so much lingering question out there about, do I still need to get all of these filings in by April 15th, 2025 to meet the statutory deadlines? What is going on with processing? How do I deal with refunds that come in after the deadline for filing the amended return. We have a great conversation. This truly just dropped, but it's a great conversation with April Walker from our tax section and Chris Whittick, who's been so engaged around the employee retention credit. And it's going to give you some updates on a lot of those pressing topics. So again, hot off the presses, and I'd recommend that you listen to that one as soon as you can. Always good to remind you that we do have the tax season resource center, and it'll give you a lot of good links, including the tax compliance kits and some of the advocacy statements we've been making about IRS service levels. So you've got those resources and to keep you up to date. I wanted to mention this again because on the last town hall, we mentioned that given the recent federal layoffs, we wanted to provide some resources to help those who've been impacted. So AICPA members have access to a resource hub, and it will help with resume tips. You can get a free review of your resume, but we've also created a repository of resumes so that those who've been impacted and are looking for another position can submit their resume to CPA assistance at aicpacema.com. And we are giving firms who sign privacy agreements and those kinds of things, and other businesses, so not-for-profits and business and industry, academia, et cetera, access to those resumes for potential matching of job candidates and needs within the organizations. So if you're an employer and you're interested in matching up with these candidates, you can email that same address and we'll give you the information on how to get access to that. So far, we've had about 160 resumes submitted, and we've had about 150 employers interested in participating in this resume pool. So don't forget about that resource, and please share that with your network if you know of employees who've been impacted by the federal government workforce reductions. And with that, Michael, I think we are on time for our open forum.
Lisa, great job. Lot there, and as always, you managed to do it quickly and comprehensively, so well done.
Did I do it simply?
Yeah,
I wanted to do it
absolutely.
simply.
I think you did.
Okay, thanks.
So maybe before we turn to our panel on open forum, Lisa, Lisa Simpson, we shared out some of the results of the polling earlier, but it was pretty interesting. I think, Lisa, if we had guessed coming into this, we would have been pretty accurate. But for the most part, the way it kind of broke down was more than half of attendees feel like tax season is pretty much tracking the same as it did last year. Small percentage felt like it's trending a little bit worse, and about the same amount felt like it was trending a little bit better, which is interesting. But we're going to share all that out in the newsletter. But Lisa, I know you're talking to a lot of firms, and would you say that's pretty consistent with what you've heard?
Yeah, it's pretty consistent with what I've been hearing. Yeah, absolutely.
Well, good. Well, thank you all for participating. And Lisa, your suggestion of putting in where they are coming to us from today really blew up the Q&A. So we have a really good picture, and some are in some really nice and warm places. I wish I was there with them. So Lisa Bodell, maybe let's start with you. It's funny because it's a question that popped into my head as you were speaking, and it came through a lot. Is just a lot of us feel like we're just kind of completely at the mercy of our email inboxes. So. Yeah. Any quick tips, techniques on how to get out of that cycle, break that cycle?
Yeah, I mean, a few things. There's a lot that can be done with AI, by the way, in terms of automating that. But I think also too, it's time boxing it, not being a slave to it constantly. It's like a dopamine hit for most of us. I think another thing is how we use it. And one of the tips I always like to tell people is to use BLUF, bottom line up front, which is a really good tip for people, because anything in my company, if you get an email from me, the first word is BLUF and then exactly what I need. And people respond to mine, probably because I'm the boss, but also because it says exactly what I need from them right up front. I think our emails are too long and too wordy, and that's why they're very draining.
And Lisa, I remember a tip from the first time I heard you speak, and it was about putting in your subject line, don't reply, DNR, no need to reply.
And NTR. Yeah, that's those empty calorie emails. Let's get rid of those too. It's with the best of intentions, we actually create a lot more complexity than we realize.
Yeah, it's great. Michael, I don't know, do you have any other questions? I've been busy talking, so I haven't really checked the questions very much.
I do have one more for Rachel, and there was a question just on are the Doge cuts reflected in the continuing resolution?
So that's a really good question. They are not. So the budget or the continuing resolution, they are not reflected in the CR. So the CR is pretty much the same as it was previously, with just some slight changes. I mentioned the IRS changes, and then they did increase defense spending by about $6 billion. But it was pretty similar to what has previously been passed.
Great. Lisa Simpson, any questions you want to pose?
I got a question about, give us 2 examples of simplifying a tax practice. We've only got a minute, so I'm going to give you one example, and that is really honing in on who your ideal client is and who is going to balance out the work that you're going to do for them and the benefit that you're going to get back from it. So you may decide from a strategy standpoint that you're going to build your entire firm around standalone 1040 returns that you only touch them once a year. That's fine if that's your strategy. But many traditional firms are looking at how they can transform those single touch clients and either shift them to another tax preparer who has created that strategy, or develop an ongoing relationship throughout the year so that tax planning is a part of the process. So that looking at any depreciation needs or business write-offs by the end of the year, that's built into the process. And then come tax time, you know what they need to pay on their extension, and then you finalize the return later in the year. That's one clear example of how firms are simplifying by really honing in on who they want their client to be.
It's a great
Thanks,
one.
Lisa. And thank you, Lisa Bodell and Rachel. We're going to let you go here, but great contributions. Really appreciate you being here with us this afternoon. And we'll see you back soon. Lisa Simpson, as I sit here and kind of reflect on today's agenda, I think, when we sit down every other week to put together kind of content for the town hall, I know we work really hard in trying to make it as perspective, as comprehensive and diverse from a perspective standpoint. Not, the technical updates are so important and regarded by members dialing in, but we're also trying to bring things that just either challenge people's thinking or help them think about other ways just to drive either business efficiency or just think innovatively about what they get up and do every day. And I know we do a lot to do that, but I'm curious of your comments, Lisa, because again, as the one who delivers all the technical content every week, I know you're just as passionate about all these other concepts that we bring to the town hall.
I am, and as we were talking with Lisa, I was like, is this the right time? And I think the answer is yes, because I'm seeing questions from the audience about how to help their clients with all of the uncertainty, how to help their clients with their worry about what's going on in the environment. Is the IRS going to be able to process their returns, et cetera? And so giving some tips and strategies on how to simplify and help control the chaos, I thought was really important, even in the middle of busy season for so many of our audience.
Agree, and again, we always welcome the feedback from town hall participants on ideas for content and for segments. So, Lisa, real quick, I just wanted to call out. We did this on-demand webinar for tax research with Samantha Bowling. Really well received. We had incredibly high attendance, but just really great feedback from firms of all sizes. So, want to let everybody know and remind them that that's available. Particularly as we're talking about how to get more efficient with practice areas. I know, Lisa, you wanted to talk a little bit about just business transformation.
Exactly, and this is one of my areas where I get really passionate about how we can transform the entire profession, public accounting and business and industry. And a lot of the challenges that I see in firms stem from their governance strategies. So this is a new resource center that we're launching within the PCPS Transforming Your Business Model, and it's about governance. So we're kicking it off with a podcast that'll talk about why this is so important and relevant. And I'm really excited that we're going to be able to dive into these conversations in the future.
And with that, Lisa, we'll remind everyone that these are rebroadcast, the town hall. So this will be rebroadcast on Monday, March 24th at 1 p.m. Eastern Time. I know folks have been asking about that. But otherwise, Lisa, I just want to thank you for being here with me today. And as always, adding a lot of great content.
Thanks. It was great to be here.
Take care, everyone.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.